What's going on, everybody? Welcome back to my channel. In this video, we're going to dive deeper into the three market phases that you should learn and understand if you would like to trade any CFD, whether it's gold, Bitcoin, Euro dollar, British pound dollar, oil, you name it. If you would like to trade anything, either buying or selling, you need to understand which phase of the market that instrument is currently sitting at. It's either are we going to be in an uptrend? Are we going to be in a downtrend? Are we going to be consolidating? You need to understand where we are. So the next time you make a decision, you have the probabilities on your side because you understand and you know how to identify market trends. So let's get into it. The first trend or the first movement, type of movement that every single market goes through, it's the uptrend or bullish movement. And as you can see right here on the screen, we have a series of candlesticks. And for those who don't understand this is basically like an introduction video on how to read price action and how to read graphics with candlesticks. These are the candlesticks, as you can see. They call them the Japanese candlesticks. And this is the best way to read the markets in order to make a analysis in order to trade, because this really indicates where price is moving, and you will understand exactly what I'm talking about once you see the details of what makes that trend being an uptrend, a downtrend, or consolidation phase. And also we're going to see some examples on the real markets on the graphs as to where you should enter a trade or what you should be looking for when you're looking to trade something. And this is something very basic, but it's something that you should be very comfortable doing, because with this, you're going to have a much better direction or a much better idea of where price is moving. Okay. So going back to the uptrend, we can see that when you how do you identify an uptrend? It's basically when price moves and creates higher highs and higher lows. What is a higher high and what is a higher low? Well, let's see. Every single candlestick that you see here that it's green means that price is moving up. And every single candlestick that you see that it's red, it means that price is moving down or there's selling pressure. Not necessarily indicates direction, it more so indicates that during that specific period of time, there were more sellers than buyers, or sellers were in control rather than buyers. And that's how the market moves. Market never moves only in one fashion. You will never see only green candles. You might see green candles like one after the other, but it's never going to just be infinite green candles. You have to have some retracements. You have to go through the different phases, because remember that trading is a zero-sum game. So whenever you buy something, somebody's selling it. So market fluctuates and adjusts. So that's why we have uptrends, downtrends, accumulation phases, etc. Okay, so to identify a uptrend, we know that market, it's moving in the upward direction, and we see that it's making higher highs, as you can see right here, and making also higher lows. And then the next time price moves up, it's going to make a higher high again right here, and then it's going to make a higher low right here. What does this mean? It means that price is printing new highs without visiting the previous high that it did. In this case, this high right here is not being visited again after I reached this high right here, because this is a new high. Same with the lows. This was the previous low right here, and then we had a new low right here closing higher than this low. That's why it's called a higher low. So when you have price repeating this pattern up and down, up and down, up and down in an uptrend, that's how you call high. You can call it higher highs and higher lows. You know that you're in an uptrend. And basically, that's the movement. It goes up, it goes down, it goes up, it goes down, it goes up, creating higher highs, higher lows, higher highs, higher lows, and higher highs. It's always one step ahead of the other. Now, let's look at the next one. Next, we have the downtrend or bearish movement. Here's the opposite as the uptrend. As you can see, we're making lower lows, lower highs, lower lows, lower highs, and lower lows. It's the opposite of the other example, which was the uptrend. Don't worry about the colors. I know that they're green is up and red is it's down. This is just for illustration purposes. We're going to go into the real graphs and identify the downtrend, but this is for you to have the idea and understand that what makes a downtrend, it's price printing lower lows, lower highs, lower lows, lower highs, lower lows. You can just draw a arrow or just a trend line. This is called a trend line to the downside, and you will see how price it's actually moving in that fashion. That's the downtrend. Lastly, we have the consolidation or accumulation phase, and where basically you do move up and down, but you don't go into any new direction. You're not making any new higher highs. You're not making any lower lows, lower highs, or higher lows. It's basically all the same. It goes up, it goes down, it goes up, it goes down, it goes up, and goes down. A better idea to understand this, it's when price has no clear direction, and most of the time this happens when there's no economic catalyst or economic event that is impacting price in a way that it's creating more demand or that it's creating more supply and demand for this particular asset that you're trading. So when we have a consolidation phase, yes, you do have movement going up and down, and yes, you can trade into a consolidation area, or you can trade this somehow, but it's not ideal if you're starting to identify trades. You would be better off trading in an uptrend or a downtrend. A consolidation or accumulation phase can be a little bit trickier, but you can definitely trade this. Let's go into the real market and see a few examples of uptrend, downtrend, consolidation, and a few trades that would be good to enter knowing what's happening with the market direction. All right, let's look into the graph and see what we can find. Here we have an actual chart of gold, the chart of gold in the 4-hour time frame. This is gold and euro. I usually trade gold and dollar, but for this example, it doesn't matter what we're using. It's just basically to illustrate what we could do. But yeah, this is basically how to identify a trend. So let's just go randomly let's identify an uptrend, so we can understand what potential entries or what would be like the best way to enter or invest in this type of situations, when we have an uptrend. So we have to identify here where we can find an uptrend. For example, here's a perfect one. Every single candlestick here, green means that price is going into the upside, or there were more buyers at that specific time during those 4 hours, because every single candlestick that you see, it's an equivalent of 4 hours. Okay, so that's something that you have to understand. It's called a time frame. So this is the 4-hour time frame, and as you can see, let's go ahead and identify what market trend are we. Now we see here that we start moving and pushing to the upside from this area, and we create a higher high, and we create a higher low, and then we have a new higher high, and then we have a higher low, and a new higher high, and a higher low, and a higher high, and a higher low, and a higher high, until we reached an area and where price started moving downwards. Now, it's not moving that aggressively as it moved to the upside, but you can see now that price, after reaching this area, this price point, and like reaching all the way till here, then it started moving in the opposite direction. Then it started making lower lows and lower highs and lower lows and lower highs and lower lows, and that's how we identify that we have a downtrend, right? So moving back into the uptrend, to identify it really quickly, we can also draw a trend line like so, and you see that price is moving every time it moves in this direction, like this. For example, it moves up, makes a higher high, it goes down, makes a lower low, goes up, higher high, goes low, higher low. It bounces every time it reaches this trend line. So what we can do here is the following. Let's pretend that I don't know what price is doing, and we can do a replay. I can just put it somewhere around, let's do it right here. And we don't know what the future is, but let's say the price is currently at this point right here. So it's been moving down. As we can see, we have a downtrend right here, making lower lows, lower highs, lower lows, lower highs. You already know the drill at this point, hopefully. And let's see what happens. Let's go ahead and hit play. Price is moving. Let's see what happens. All right. So now it seems that we're moving and switching direction. because now we're not printing lower lows and lower highs and lower lows and lower highs. We're actually starting to do and form a higher high, a higher low, and a higher high. So now possibly after this downtrend, we're now creating an uptrend. We're now creating an uptrend like this. And if we have an uptrend like this, you know, when price goes and makes higher highs and higher lows and higher highs and higher lows, we can say that the next time that this low is being formed, it should respect this previous low. If we would like to confidently say that we're starting to start a uptrend or bearish or bullish movement. So you can enter a trade right here. Why? Let's see. Let's pretend that I'm trading a uptrend and I'm entering a long or buy position. This is how I would enter, and I would basically target the previous high, which is this area right here, right over here, and my stop loss, which is the amount of money that I'm willing to lose if this trade goes south or it doesn't go in the way I'm expecting it to go. In this case, south, down. It would be below or at this lower high. Sorry, this higher low. Because if we're in an uptrend, price shouldn't be making lower lows and lower highs. It should be making higher highs and higher lows. So I can confidently put this just around this area, you know, just to respect price. And let's hit play and see what happens. All right, TP, take profit hit. This trade went almost immediately into profit. And the reason why is because we're in an uptrend. So there's a saying that goes, trade with the trend, or the trend is your friend, or don't go against the trend. This is a clear example of why you don't want to go against the trend, because if you're forming higher highs and higher lows, next time you're expecting a higher high and a higher low to be formed, you can, you know, with more confidence, go ahead and put a trade in there, because there's a high probability that if price would like to continue moving upwards, then we have to respect the previous higher low. And this is one example of a trade. All right. Now let's do and see an example of a downtrend. So let's see where we are right now. Obviously here we're after this whole move, this uptrend has just happened. Let's see if market switches or shifts direction. So let's go ahead and give the market some time in this replay mode. Okay, so now we can definitely see that price, it's not moving to the upside anymore. It's making lower lows, not respecting the previous lower high. So we see here that from going from this direction, now price, it's actually making this direction. Hopefully, with the analysis that we're making, price should be moving on a downward position if we're not respecting this previous higher highs and higher lows. So let's see what happens. We're expecting price to continue moving down. So if price respects the previous lower high, then it means that it's going to make a new lower low, because this would be the new lower low, and we can probably enter a trade moving in this fashion. So let's see. Okay, so we see here that price starting to move down again, and it moved all the way up, but it respected this previous lower high. So what we can do is the opposite as the other trade, which is entering a short position, and the stop loss, if we are in a downtrend, it should be respecting this previous lower high. So we're going to put it at that level. If price should continue moving down, it should respect this area right here instead of moving upwards, you know? And to take profit, let's just target this low right here on the left. So it would be like this. Make this a little bit bigger. And let's see what happens here if we're in a downtrend. Let's see the play. Nice. Okay, there it goes. So we are in a downtrend now. As you can see, price is moving down. It made a lower high, it made a lower low, lower high, lower low, lower high. And here from moving upwards or doing a consolidation, we don't know. But what's a good idea is that this trade right here, as you can see, it's a 4-to-1 risk to reward. So if I would just risk, for example, $100, I would be able to, let's make it a little bit lower, just for this example, to, yes, like right here. If I would have let this trade run all the way up until here, it's a risk to reward 3-to-1. So it means that if I risk $100, then my potential win, it's 300. And it went all the way down to this area right here because we identified that we're trading in a downtrend. So let's go ahead and now and find a consolidation example so we can wrap this video. All right, here we go. Let's look at this consolidation phase or this example. Let's go ahead and move the replay up until here. Let's say that price starts moving in this fashion and it's not making any new higher high and higher low. And we can see that because price went up, went down, went up, went down, and now it's starting moving upwards again. But we're not making any new lower low, lower high. We're just staying in this area or this line that we can call support, and the top area we can call resistance. And if we're moving like this, most likely we're going to continue moving like that. So let's see. Okay, we reached that bottom area again, and we're not making any new lower lows or any new lower highs. So what I would do is, if you'd like to trade this, you can do a buy from this area, and you can target this high again in order to take your profit. And your stop loss, if we're respecting this range and price has no clear direction, it's just moving in this up and down, then we can say that the stop loss can be below this previous candles, because if we're not moving or closing below this support or this gray rectangle, it means that price is going to continue moving in a consolidation or ranging. So let's see what happens if you place a buy right here. You can actually place it right here to be more realistic, because you now identified that after this green candle closed, you're still respecting this support. So let's enter somewhere around here just to be more realistic, and let's see what happens. There you go. Take profit hit. And like I said, it reached again this area. It seems that it was going to break out, but again, as you can see, price closed back into the range, ranging again, up and down, up and down. Similar, you can do something similar to this by trading the other way around. You would put a short position right here at the break, and maybe your stop loss somewhere over there to make a 1-to-1 trade and trade it like this. But again, it's not that clear, but there's opportunities that you can trade in this range. Of course, there's high probability trades when you're trading uptrends and downtrends, but if you want to go and venture yourself into a consolidation or a accumulation phase, by all means, go ahead and do it. Anyways, thanks again for watching. Thanks for reaching all the way until here. If you like this video, please give it a thumbs up. Comment, let me know what you think. If you'd like to watch more videos like this, subscribe to the channel. I hope this video was helpful, and practice on your own. Open any charts, go to tradingview.com and try to identify uptrends, downtrends, and consolidation, and you will be able to understand what market phase you're currently at. Anyways, thanks again for watching, and I'll see you guys next time.